Hey guys, it is Julie here with TipRanks. Today we're taking a look at 3 stocks that have all recently had some pretty big insider buying within this last month and also come with a strong buy rating from analysts. We're going to take a look at what these companies do and what those analysts are predicting for their stock's future. Right before we get into all of that, this is your friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and leave your thoughts in the comments down below. Now, let's take a look at how we came across these insider stocks. We found today's stocks by using the Insider Hot Stocks tool from the TipRanks research tools. This will show you stocks that have had insider activity based on 4 different strategies. We'll be looking at major event and top rank strategy today. This will give you a list looking at about the last week here. And on the right, you can see all the details of those transactions by insiders. So from that list of stocks, we narrowed it down to 3 that had sizable activity and those buy ratings from analysts as well. Now, I wasn't targeting any specific industry or sector today, but it turns out that all 3 companies we came across are in the biopharma industry. So on that note, I do want to advise you guys that this can be a very volatile industry. A lot of these companies will fluctuate depending on clinical trial results and especially FDA approval. Keep in mind that these analyst ratings are looking at catalysts over a 12-month period, and none of them are guaranteed to turn out positively. So just make sure you understand all the risks and are doing your own due diligence before making any investment decision. With that being said, the first stock we're going to take a look at is MacroGenics. They trade under the ticker MGNX and are currently priced at $22.59. Looking at the chart, you can see that their stock did take a big dip here in June. This seems to have followed the notification of one law firm investigating concerns whether some of its officers or directors had violated federal securities laws. This did also follow news on May 19th that in one of their phase 1 clinical trials, there were some adverse events. Now, that isn't something that is uncommon in the stock world, but definitely something to be aware of. And they do have a pretty robust pipeline that we'll take a look at here shortly. But let's start off with the recent insider activity. And that occurred 6 days ago when biotech target NV, which is an over 10% owner of the company, made an informative buy worth a total of about $3.6 million. MacroGenics is a clinical stage biopharma company focused on discovering and developing innovative monoclonal antibody-based therapeutics for the treatment of cancer. The combination of their technology platforms and protein engineering expertise has allowed the company to generate promising product candidates and enter into several strategic collaborations with global pharmaceutical and biotech companies. Their bispecific DART platform technology exploits multiple mechanisms, and they have a deep and differentiated pipeline with unique immune-based mechanisms while retaining major market rights for 7 of 8 of their clinical assets. They also have one product that launched commercially in March of this year, which is MARGENZA. MARGENZA is a HER2 neo receptor antagonist indicated in combination with chemotherapy for the treatment of adult patients with metastatic HER2 positive breast cancer who have received 2 or more prior anti-HER2 regimens, at least one of which was for metastatic disease. They have a diverse portfolio of oncology product candidates with several clinical trials currently underway or planned for the near future. In mid-June, they entered into a broad strategic collaboration with Zai Labs. This will involve up to 4 immuno-oncology molecules, with the first collaboration program covering a lead research molecule that incorporates MacroGenics' DART platform and binds CD3 and an undisclosed target expressed in multiple solid tumors. The second collaboration program will cover a target to be designated by MacroGenics. Under the terms of the agreement, MacroGenics will receive an initial payment of $55 million. In addition, they're eligible to receive up to $1.4 billion in potential milestone payments for the 4 programs. Looking ahead at 2021, they have a few key expected milestones. This includes several clinical updates in late 2021 and clinical updates in the 3rd quarter, as well as an ODAC and PDUFA this summer. Their stock has 8 current analyst ratings. And it does come in as a strong buy, based on 7 buys and 1 sell. The average price target of $37 would represent a 64% upside potential for this next year. Looking at some of the most recent ratings, we have one buy rating with a $50 price target, which would be nearly a 120% upside potential. Second on our list today is a company that is fairly new to the public market. That is Werewolf Therapeutics. They trade under the ticker HOWL or HOWL and are currently priced at $15.33 per share. You can see they IPO'd back in May around the $16 price point and did fall from there, but are now slowly returning to that area. For our insider transactions, the most recent occurred 7 days ago when RA Capital Management, which holds over 10% ownership, bought about $4.1 million worth of shares. Werewolf Therapeutics is another biopharma company that is focused on cancer therapies. Their technology is designed to unleash validated and proven pro-inflammatory mechanisms on tumors while preventing unwanted side effects on non-target tissue. They create systematically delivered targeted therapies that address the limitations of immuno-oncology. They are a highly innovative company striving to redefine the cancer treatment landscape with potential best-in-class therapies. Their pipeline includes 3 main candidates. You have WTX-124, 330, and 613. 2 of these are in their IND or investigational new drug enabling phases. WTX-124 is a systematically delivered, conditionally activated interleukin-2 molecule that is being developed to minimize the severe toxicities that have been observed with the recombinant IL-2 therapy and maximize clinical benefit when administered as monotherapy or in combination with checkpoint inhibitors in multiple tumor types. WTX-330 does the similar thing while being administered in combination with checkpoint inhibitors in refractory and/or immunocologically unresponsive tumors. From their IPO in May, the company sold 7.5 million shares at $16 per share, resulting in net proceeds of approximately $108.9 million. As of March 31st, their cash and cash equivalents decreased to $84.6 million, and with the net proceeds from their IPO, they will have sufficient funds to operate for at least the next 24 months. One analyst from Evercore ISI provided some commentary on the stock, noting that cytokines are validated targets for cancer, but their use has been limited by an intolerable safety profile. However, Werewolf has a promising potential solution to this challenge, and the company's preclinical data has been strong, supporting an increased therapeutic window and an anti-tumor effect. Altogether, the Werewolf Therapeutics stock has 4 current analyst ratings, and it comes in as a unanimous buy. The average price target is $26.50, which would be a nearly 73% growth potential for the next year. Our highest rating is the most recent from 5-star analyst Michael King, who came in with a $32 price target, which would be an upside of 108%. And the third company on our list today is 89 Bio. They trade under the ticker ETNB and are currently priced at $18.40. You can see that their stock did take a big dive in the middle of September there, and that was following a big share offering announcement. For our insider activity, we have 2 recent transactions from RA Capital Management, and yes, that is the same company that made a big purchase of the previous stock. They're also an over 10% owner of this company, and in the last month have purchased about $4.2 million worth of the share. 89 Bio is a clinical stage biopharma company focused on the development and commercialization of innovative therapies for the treatment of liver and cardiometabolic diseases. The company's lead product candidate is being developed for the treatment of non-alcoholic steatohepatitis or NASH and severe hypotriglyceridemia or SHTG. Both of these candidates are in phase 2 trials, with their clinical trials Enliven for NASH and Intrigue for SHTG. Their Enliven trial was just announced earlier this month, saying that we're pleased to initiate the Enliven trial, which is an important milestone in our clinical development program for NASH. It is a well-powered trial that builds on positive data from the phase 1b/2a trial, which has demonstrated that it has the potential to combine strong efficacy, a favorable safety and tolerability profile, and potentially best-in-class dosing convenience. They're encouraged by the robust responses that were observed across various efficacy measures and believe these improvements will translate into histology benefits in Enliven. For key 2021 milestones, they're expecting to report top-line data from a phase 1b/2a trial in NASH by the year end. They're also going to initiate a phase 2b NASH trial in the first half of 2021 and report top-line data from their phase 2 trial of SHTG in the second half of 2021. In their most recent quarterly report, they shared that they had cash equivalents, and short-term investments of nearly $190 million, with their R&D expenses coming in at $10.1 million and their general and admin expenses coming in at $4.6 million. The 89 Bio stock has 6 analysts with current ratings, and it comes in as a unanimous buy. With an average price target of $55, they'd be looking at a nearly 200% upside potential. While not all analysts actually provided price targets along with their buy ratings, the most recent came from 11 days ago from 4.5-star analyst Jay Olson with Oppenheimer, with a $60 price target representing a 220% upside potential. So there are 3 biopharma stocks, all with some recent insider activity and strong buy ratings from analysts. It's clear with those price targets that analysts are feeling fairly bullish on all of these companies. But like I said, keep in mind those are 1-year price targets and are very dependent on certain catalysts that are never guaranteed to go a certain way. So just always approach with caution, do your own research and due diligence before making any investment decisions. Now, if you made it all the way to the end of today's video, make sure you hit that thumbs up button. Leave your thoughts in the comments down below. What do you think of these 3 companies? Did any catch your eye more than others? I always love hearing from you guys. Thank you so much for watching. I hope you have a fantastic day, and we will see you back here next time.